Imagine a healthcare giant, right? And it's going through this massive transformation. How does it even manage that? Juggling growth, bringing new businesses into the fold, innovating constantly in a market that changes so fast.
It's definitely a balancing act, a complex dance, like you said, between strategy and just getting things done day to day.
Exactly. And today, we're diving deep into Aster DM Healthcare Limited. We want to see how they're pulling it off, looking specifically at their Q1 FY26 results. That's the quarter ending June 30, 2025.
Yeah, we've gone through the investor presentation, the board meeting notes, the press release, the whole lot.
So our mission today, cut through all that data noise.
Pull out the key insights, the important stuff, basically give you a shortcut to understanding where this major player stands right now and where they're headed.
Okay, let's get into it then.
Yeah.
First up, that snapshot of Q1 performance. It looks like pretty healthy growth across the board. What numbers really jumped out at you?
Well, the financials definitely paint a strong picture. Revenue, for starters, grew a solid 8% compared to last year. Reached INR 1,078 crores. That's up from just over 1,000 crores.
Nice.
But what's really telling, I think, is the operating EBITDA. That jumped 21%.
21%? Wow.
Yeah, up to INR 215 crores from 177 crores. So it's not just about making more money. It shows they're getting much more efficient at their core business.
Right, and that boosts the bottom line.
Exactly. Profitability is looking strong.
And I noticed the margins looked pretty good too. That efficiency must be showing up there.
Absolutely. Operating EBITDA margins, they climbed to 20.0%.
Up from
17.7% last year. That's a 230 basis point improvement.
Which is what, 2.3 percentage points? That's significant.
It really is. And it comes down to, well, disciplined spending, smarter overheads, the lab business doing better. And critically, the wholesale pharmacy hit break-in on EBITDA.
Ah, okay. That's a big turnaround for the pharmacy unit.
Definitely helps the overall picture. And the normalized profit after tax, that also grew nicely, 22% year over year, hitting INR 90 crores.
Good stuff. And you mentioned the auditor's note, an unmodified opinion. Just quickly, why is that important for listeners?
Right. So an unmodified opinion, it's basically the auditor saying, yep, these numbers look right.
A clean bill of health.
Exactly. It means the financials give a true and fair view, lots of confidence for investors, stakeholders, anyone looking at the company. It's fundamental.
Got it.
Oh, and we should probably mention, there was a small exceptional item, about 4.4 crores.
Okay.
It was a one-off cost, professional fees related to a merger and a proposed acquisition. So just costs tied to their growth strategy, not operational.
Right, makes sense.
Sure.
Okay, moving beyond the pure financials, how did the operational side look? Things like how they use their beds, patient stays, that often tells a deeper story.
It really does. And we saw improvements there too. ARPOB, that's average revenue per occupied bed, climbed 14% year over year.
13%.
Yeah, up to INR 50,200. And that was driven by a few things. Better average length of stay, or ALS, growth in oncology, and just a better mix of specialties.
And ALOS itself improved. Patients staying shorter.
Yep, it got more efficient, dropped 4% year over year, from 3.2 days down to 3.1 days.
And you mentioned robotics earlier. That played a role.
Definitely. Increased use of robotic surgeries, plus just streamlined hospital operations, help them get patients home quicker and use those beds more effectively.
That's fascinating. Technology directly impacting efficiency and patient recovery. A real win-win.
It is.
And they're not just optimizing, they're adding capacity to more beds.
That's right. Added over 320 beds in the past year. So they're now at 5,197 beds total as of June 30th.
Okay.
And oncology, that specialty focus, its contribution ticked up from 10% to 11% of revenue. And oncology revenue itself grew 16%.
So a clear strategic push towards those high-value areas.
Seems like it. Better ARPB aligns with their focus.
Okay, so big picture. Growing revenue, becoming more efficient, focusing strategically. Let's dig a bit deeper now. Where is this growth actually coming from? How did the different parts of the business perform?
Well, the core hospital business was definitely the powerhouse. Operating EBITDA margin there hit 22.6%.
Up from about 20.8% last year.
Exactly. And what's really interesting is their mature hospitals, the ones running for over 7 years, they performed even better.
Oh, really? How much better?
Margins there reached 24.5%. And the return on capital employed, the ROCE, was an incredible 34.6%.
34.6%
Yeah.
ROCE. That's
Yeah.
that's seriously impressive for established assets.
It really is. Shows those units are running extremely efficiently and generating fantastic returns, which, helps fund all the new expansion.
Good point. So how did things look regionally? Let's break down the clusters. Kerala first.
Okay, Terla. Revenue grew 5% year over year this quarter, which is actually a solid recovery because they saw a 4% decline in the previous quarter, Q4.
Ah, okay, so a bounce back. What drove it?
Mainly a nice 6% bump in inpatient volumes compared to the last quarter, and their operating EBITDA margin jumped significantly to over 270 basis points year over year, hitting 25.3%.
Strong turnaround in Kerala then. What about Karnataka and Maharashtra?
That cluster showed really robust growth. Revenue up 13% year over year. Operating EBITDA grew even faster, up 23%.
Nice margin expansion there too.
Yep, margin improved 200 basis points to 23.2%. And a key factor there was ARPOB, which grew a really strong 17%.
17% ARPOB growth. Why so high?
Mostly down to doing more high-value procedures, especially in oncology and neurosciences. Complex cases, higher revenue.
Makes sense. Driving profitability through specialization. And Andhra and Telangana.
That cluster saw revenue grow 7%, supported by an 11% increase in ARPOB, so similar story there. And they also improved ALS, brought it down from 4.0 days to 3.7 days.
So efficiency gains there as well. Okay, that covers the hospitals. What about the other bits, the labs, the pharmacy? Are they contributing positively?
They are. Aster Labs revenue grew 14% year over year, and importantly, it stayed profitable with an 8% EBITDA margin.
Good, consistent performance.
And the wholesale pharmacy, we mentioned it earlier, achieved EBITDA break-even this quarter.
Right. How'd they manage that?
Partly by strategically getting out of some units that were losing money. It shows they're actively managing the portfolio, focusing on overall profitability.
Smart moves.
Yeah.
So improving what they have, trimming what doesn't work. But they're clearly not just sitting still. They've got big expansion plans too, right? What's on the cards?
Oh, yeah, big plans. The headline news is a major expansion in Bengaluru.
Okay.
They're building a new 5th hospital there in Yeswanthpur. It's going to be a 500-bed multi-specialty facility.
But 500 beds, that's huge. What's the investment and timeline?
Total investment is pegged at INR 580 crores, and they expect it to be up and running by the second half of FY29.
And why Yeswanthpur? What's the thinking there?
Strategic location. It's a really high-density area, great connectivity. The goal is to cement their leadership in Bengaluru. This new hospital will push their total capacity in the city over 2,500 beds.
Wow. Really doubling down on key cities.
Seems to be the plan, creating a strong network effect.
And they also upped their stake in Aster Ramesh hospitals.
They did. Bought another 13%, taking their total holding up to just over 70%. Shows confidence in that partnership and wanting tighter control, likely.
Makes sense.
And another interesting internal move was for the Whitefield expansion. They approved buying assets for a new block, Block D, from their own subsidiary.
Okay, shuffling assets internally.
Yeah, for about 80 crores. This block adds another 159 beds, and it's already being built. So just streamlining things to bring that capacity online efficiently.
Got it. So overall, how many beds are they planning to add in total? It sounds like a lot.
It is. The plan is to add over 2,600 beds in the coming years.
2,600.
Yeah, which would bring their total capacity to over 700 to 800 beds eventually.
That's a massive scale. How are they doing it? Just new builds?
Both. A mix of brownfield expanding existing hospitals, like adding those 159 beds in Whitefield, or 350 planned for Aster Med City and major greenfield projects.
Like entirely new hospitals.
Exactly, like the 454-bed Aster Capital in Trivandrum, a 300-bed Women and Children's Hospital in Hyderabad, a 264-bed hospital in Kasaragod, and a big 430-bed project in Sarjapur, Bengaluru, coming in 2 phases.
Wow, that's a really ambitious pipeline across multiple regions. So what are the key priorities guiding all this growth? How do they plan to manage it all?
Well, their strategy seems pretty clear. Leverage technology, we saw that with robotics impacting ALOS, focus on niche, high-value specialties, optimize the facilities they already have, drive efficiency to keep costs down.
And create that ecosystem.
Exactly. Integrate the labs and pharmacies for that complete patient journey. And underpinning it all is, careful, prudent investment in these expansions while keeping an eye out for other opportunities like mergers.
Which brings us neatly to the really big one, the merger with Quality Care India, QCIL. That feels like a total game changer in terms of scale. How's that progressing?
It really is the biggest piece, and it's moving along quite well. The share swap part is done.
That was giving Blackstone and TPG a stake in Aster in exchange for Aster's stake in QCIL.
Exactly, about a 3.6% stake. Those shares are listed now. And critically, they got the green light from the Competition Commission of India, the CCI.
Okay, CCI approval is huge. What's left?
They're waiting on no objection letters from the stock exchanges and SEBI, the regulator. Once they have those, it's off to the NCLT, the National Company Law Tribunal, for the final sign-off.
And the timeline for completion?
They're targeting Q4 of FY26, so maybe early next calendar year.
Okay. And while that's happening, how did QCIL themselves perform last quarter? Important to know both sides are strong going in.
Yeah, QCIL had a strong quarter too, double-digit growth. Revenue was up 16% year over year, hit INR 1,079 crore.
Very similar to Aster's revenue, actually.
Almost identical for the quarter, yeah. Their operating EBITDA grew 19% to INR 227 crore, with a healthy margin of 21.1%.
Solid numbers, operationally.
Also good, ARPOB grew 15% to around 45K. ALOS improved 3% to 3.9 days, and they brought on board over 70 new doctors, strengthening their clinical teams. Plus, their new Nadrocoil unit hit EBITDA break-even really fast in just 3 quarters. Shows they can ramp up new facilities efficiently, too.
Okay, so two strong companies coming together. What does that combined entity actually look like on paper? The pro forma numbers, and what about those all-important synergies?
Right, this is where you see the scale. Combined, we're talking one of India's largest healthcare providers, over 10,350 beds.
10,000 beds.
Yeah, across 38 hospitals in 27 cities. If you look at Q1 FY26 pro forma, the combined revenue would have been INR 2,157 crore, up 12% year over year.
And EBITDA.
Pro forma operating EBITDA, INR 442 crore, up 20%. So you're looking at a combined entity with really healthy margins and ROCE likely above 20%. Significant scale and profitability.
Huge potential. How do they plan to unlock even more value through synergies?
They've identified synergies they think could boost EBITDA by 10–15% in the near term.
Okay, how?
Several ways. Revenue side. Reaching more patients, attracting international patients with the bigger network, better deals with insurance companies.
Makes sense.
Supply chain, huge potential for cost savings by centralizing purchasing, using their combined scale to negotiate better prices with
Right.
people. An integrated doctor model means a wider pool of specialists, easier to attract and keep top talent. And then general overheads, optimizing corporate functions, sharing best practices, using technology across the board.
And synergies within QCIL itself, too.
Yeah, they mentioned potential there too, more international patients, better revenue cycle management, savings on materials and manpower. So multiple angles to drive efficiency.
It sounds incredibly promising on paper.
Mm-hmm.
But merging two massive organizations like this, it's never simple, right?
Yeah.
What are the potential hurdles or challenges in making those synergies real?
That's a really important question. Integration is always complex. You've got IT systems that need to talk to each other, different ways of doing things, operational protocols that need to be standardized.
And the people side, culture.
Absolutely crucial. Bringing together two large workforces, potentially with different cultures, needs careful management. You have to align everyone without disrupting patient care or losing your best people in the process.
So achieving those cost savings and revenue bumps depends a lot on how well they manage that post-merger integration.
Definitely. It takes meticulous planning, strong leadership, and consistent execution. It's definitely more of a marathon than a sprint. But, the logic behind it and the strong performance of both companies beforehand gives them a good foundation.
Good perspective. Okay, shifting gears slightly, it's not just about financials and mergers. What else stood out? Things like digital innovation, ESG. Those tell you about the longer-term vision.
Yeah, they're doing some interesting things digitally. Their Aster Health app, launched last November, already has over 100,000 downloads.
Wow, quick uptake.
Shows patients are engaging with it.
Right.
And they just launched a Malayalam version, making it Kerala's first regional language healthcare super app.
That's smart. Real focus on accessibility in a key market.
Exactly. And their digital health division even won an award for most impactful digital transformation.
Yeah.
So they're getting recognized for it.
Clearly investing in that digital patient experience. What about ESG, environment, social, governance? The FY25 data looked quite strong.
It did. Environmentally, they reported reducing waste by about 577 tons, saving over 7,400 kiloliters of water. Real efforts there. And impressively, over 97% of the electricity at their CMI and RV hospitals came from renewable sources.
That's fantastic. Social impact.
Also significant, over 6,000 free medical camps via their mobile medical units. And they helped over 7,000 patients from disadvantaged backgrounds with free or discounted surgeries, worth nearly 6 crore rupees.
Yeah, that's real community benefit.
Absolutely. Shows a deep commitment beyond just the business.
And governance looks solid, too.
Yep. Good board structure, 25% women directors, 50% independent directors. Ticks the boxes for good corporate governance.
It seems like their efforts are getting noticed, too. Lots of awards and recognition mentioned.
Yeah, quite a few. Leadership got recognized. Dr. Azad Mupin, the founder, Ms. Alicia Mupin, the deputy MD, both received multiple awards and accolades. Fortune India recognition, too.
And the hospitals themselves.
Yep. Individual hospitals like MedCity, CMI, RV, Whitefield picked up various awards. And in a recent Times of India survey, Aster CMI was ranked #1 for oncology, and Aster MedCity in Kochi led for cardiology.
So, recognition for quality in key specialties. And beyond awards, some impressive clinical achievements, too.
Definitely. They highlighted over 560 transplants, more than 1,900 robotic surgeries showing high volumes in complex procedures,
Right.
and several medical firsts, like India's first implant of a specific brain-sensing device for Parkinson's, or Kerala's first scarless robotic thyroid removal.
Wow. So they're really pushing the boundaries clinically, using advanced tech.
Exactly. Investing in that high-end expertise and technology, it benefits patients directly and builds their reputation for clinical excellence.
Okay, wrapping up with some key info for investors. Dividend news and upcoming dates.
Right. The board has recommended a final dividend of 1 rupee per share for the last financial year, FY25.
Subject to shareholder approval, of course.
As always, that approval happens at the AGM, the annual general meeting. The record date to be eligible for the dividend and for voting at the AGM is Thursday, August 28th, 2025.
And the AGM itself.
That's scheduled for Thursday, September 4th, 2025. It'll be their 17th AGM.
Okay, good dates to know. So let's try and pull this all together. The overall picture seems to be, well, a company firing on multiple cylinders.
I think that's fair. Robust financial performance, definitely. Aggressively expanding their physical footprint for future growth and making steady, solid progress on this massive, transformative merger with QCIL.
Yeah, this deep dive really shows a healthcare leader that's not just chasing numbers. They're innovating clinically with advanced procedures, digitally with patient apps, and sustainably with their ESG efforts.
Expanding their reach, building that integrated network, and really consolidating their position in the Indian market.
It's a fascinating story of growth, integration, and ambition. Which leaves us with a final thought for you to consider.
How might the successful integration of this huge QCIL merger, when you combine it with all that aggressive expansion and the constant adoption of new technology, how might that actually redefine what integrated healthcare delivery looks like across India in the next few years?
Right, where impact will building this truly comprehensive, patient-focused ecosystem have on healthcare access and quality for potentially millions of people. Something to think about.